Uh, Good afternoon. I'm Dr. Fasasi Kazim Adiola. Today, we'll be looking at a very important topic, bank reconciliation statement. Once bank reconciliation statement is a process of comparing the bank statement prepared by the bank and the cash book prepared by the customer to see if there's omission on the part of the bank or there's omission on the part of the accountant keeping the cash book of the customer. In the process comparing the two books, if any omission is observed, then the two book is reconciled so that they can produce the same balance. In the first place, we are going to say what is reconciliation. Reconciliation can be defined as a process of settling disputes and end disagreement disagreement between two parties. That's what we mean by reconciliation. Now the question remains this: who are we settling dispute for? Who are we ending disagreement for? We are going to look at two books being prepared by these two parties. One, we'll look at bank statement. What is bank statement? Bank statement is a periodic statement. It's a periodic statement prepared by the bank, and issued to their respective customer, issued to their respective customer monthly, quarterly, yearly, or based on customer's request. Based on customer's request. Bank statement is a periodic statement prepared by the bank and issued to their respective customer monthly. Some they issue the bank statement to them on monthly basis, while some on quarterly basis, while some on yearly basis. Or sometimes this bank statement may be issued to the customer based on the customer's request. Or sometimes when investigation is going on a customer's bank, some government agency requests for bank statement of such customer. But the bank statement is prepared by the bank. Now, if bank statement is prepared by the bank, we also have what we call cash book. Cash book is a subsidiary book. Is a subsidiary book prepared by the customer, by the prepared by the customer, prepared by the customer to show the detailed transaction, to show the detailed transaction involving bank transaction. Now, the question is this. The bank kept the bank statement. The customer kept the cash book, which is the bank column. Now, what are we expecting to know is that if the bank record the same transaction on the bank statement and the customer also record the same bank transaction in the cash book, we expected that at the end of the accounting period, both the bank statement and the cash book of the same customer are to produce the same balance. But it is not the case all the time because either the bank or the customer can make an omission. And where there's an omission, either on the part of the customer who prepared the cash book or on the part of the bank who prepared the bank statement, the result is that the bank statement closing balance will not be equal to the cash book closing balance. Now, where there is disagreement between the bank and when there is disagreement between the bank statement and the cash book, there's need for reconciliation. Now, this reconciliation means what is bank reconciliation itself? What's bank reconciliation? Let's look at bank reconciliation. What is bank reconciliation? Bank reconciliation, bank reconciliation is a process, of comparing the bank statement, the bank statement prepared by the bank and the cash book prepared by the customer. That's what we mean by bank reconciliation. It's a process of comparing the bank statement prepared by the bank and the cash book prepared by the customer. That process is known as bank reconciliation. Now, what are those factors that can cause disagreement between this bank statement prepared by the bank and the cash book prepared by the customer? What are those factors that can create omission between the two books? There are factors causing disagreement between the bank statement and the cash book. We call it factors causing disagreement between bank statement and cash book. What are these factors? One, we have what we call unpresented check. Two, we have what we call uncredited check. Three, we have what we call bank charges. Four, we have what we call standing order. Five, we have what we call dishonored check. Six, we have what we call credit transfer. Seven, we have what we call error by the bank. And we have 8, we have error by the customer itself. Any of these factors can create disagreement between the bank statement and the cash book. We are going to look at it one by one. How can each of these factors create disagreement between the bank statement and the cash book? For instance, let's start with unpresented check. And how can this unpresented check lead to disagreement between the bank statement and the cash book? For instance, unpresented check are checks issued to supplier of goods or to beneficiary but in which the check has not been presented for payment at the time of reconciliation. At the time of reconciliation. This is unpresented check. Now, we said unpresented check are check issued to supplier of goods or beneficiary, but in which the check has not been presented for payment at the time of reconciliation. How can this cause disagreement? Let's look at it this way. This is the bank statement in a very simple way, and this is the cash book prepared by the customer. This cash book by the customer, this bank statement, this debit, this credit, and this balance. On the cash book, this is debit, this credit. How does it work? The debit side of the cash book is for inflow of money into the account of the business, while the credit side is for outflow of money. Now, if the balance in the bank is 5,000, what it means is this: there's an inflow of 5,000, meaning this is the balance of the customer at the beginning, and the bank will also record it as what? 5,000. Let's now assume that the customer deposits inflow of check in that month, deposit 50,000 into the bank. This is an inflow. Now, it will be on debit, which the bank will put it on. The bank will record such transaction on their own credit. Now, 50,000 plus 5, the bank is having a balance of 55. That's the reason why once there's a deposit in your bank, the bank sends you a credit SMS, which we refer to as a credit alert. What the bank is trying to tell you is that we have recorded your deposit on the credit as an inflow into your account. We have kept our own record, and an SMS is sent to you as a reminder that we have updated our bank statement on the credit side. It's a reminder to you that try to do the corresponding in your cash book by recording it on the debit side, which means that if the bank sends you a credit alert, it shows an inflow and it's telling you to open your own cash book for checks and balances. And how do you do checks and balances? Is by recording the money on the debit side of your account. Now, what is unpresented check? You have 55,000 naira. This is an outflow. You make a withdrawal. You give Mr. Femi How much? You give Mr. Femi 10,000 naira. Giving Mr. Femi 10,000 naira, what Mr. Femi will do is to take the money to the bank. The bank will put it on the debit side. They will put it on the debit side and put Femi. That's the name on the checkbook. When 10,000 naira is collected by Mr. Femi, this for payment, your balance in the bank will remain 45,000 naira. 55 minus 10,000 here too will remain 45,000 naira. After this, the same customer also gave Chioma a sum of 20,000 naira again. Till the end of that month, this 20,000 given to Chioma by the owner of the business, if Chioma has taken it to the bank, it will be on the debit side of the bank, and the bank will send an SMS that there's a withdrawal by Chioma. But the Chioma did not take this check to the bank. The only person that took the check to the bank is Mr. Femi. Chioma did not take the check, meaning indirectly there's no outflow of money. If Chioma has presented this check to the bank will have deducted another 20,000. The bank balance will now remain 25,000. But Chioma did not take this check to the bank. For Chioma not taking the check to the bank, it means the check was not presented, and that make it unpresented check. What will be the consequence? The consequence is that the person who issued the check out, which is the business or the customer who issued the check out, thinking that Chioma has presented the check to the bank, this will now be having a balance of 55,000 minus 30,000. The cash book will be having balance 55 minus 30. The cash book will be having balance of 25,000. But if the customer requested for his bank statement will be showing a balance of 45,000. Why his bank statement is showing a balance of 45,000 is that Chioma has never taken this 20,000 to the bank for withdrawal. But the owner of the business thought Chioma has collected 20,000. His balance is having 25,000. Why the bank is telling the customer that your balance is still remaining 45,000. Nobody has come to our bank to withdraw any 20,000. How do we reconcile it? The way we reconcile it is to add the 20,000 back to the cash book balance so that the cash book too can have 45,000 naira back. In that case, where check is given to someone and the person failed to present the check for withdrawal of money till the end of that month, it will cause what we call unpresented check, and it will create a discrepancy between the bank statement prepared by the bank and the cash book prepared by the customer. Now let's look at uncredited check, which is number 2. Let's look at uncredited check. Let's look at uncredited check. Number 2, uncredited check. Uncredited check are checks deposited by the drawer. Who is the drawer? Owner of the account by the drawer, but in which the bank omitted to credit such check at the time of reconciliation. What do we mean by this? Their check you have deposit with your bank, but in which the bank omitted to credit such check. The bank failed to credit the check or an omission occur. Maybe as a result of clearing process or as a result of network issue. One, there's what we call clearing process. In banking system, there's what we refer to as clearing process. If Mr. A deposits a check in Y bank, what happened? Mr. B gave a check to what? Mr. A. Mr. B check is Z bank, giving a check to Mr. A. Mr. A debits the check in his Y bank. What can cause uncredited check is this. If reconciliation normally take place on January what? 31st. And the check was given to Mr. A on January 31st. The problem is this. This check will not be in the bank statement of Mr. A as of January. Reason being that the clearing process may take Z check, Z bank, it may take them 7 days to reconcile between Y bank and Z bank. The reason is this. Y bank will confirm whether the check of B from Z bank, whether he has up to, let's say, has up to 100,000 naira. When Y bank confirm that there's a customer called B and it has up to 100,000, what they will do is that they will transfer 100,000 from Mr. B in Z bank to Mr. A in Y bank. And that process can take 7 days. Not until when this process is completed, Y bank will not record such transaction in their bank statement. And this will lead to disagreement between customer A cash book and Y bank statement. In that case, a clearing process of bank can create uncredited check. That's one. Two, network issue. Network is a situation where a check is being deposited with a bank, but due to fluctuation of network, that check was omitted. That check was not credited, not until the end of that month or after that month. In that case, uncredited check are check that when deposited with the bank omitted or failed to credit such check in the bank statement. And why did they use the word uncredited check? The reason why they use the word uncredited check is this. The why they use uncredited check is this. If A make a deposit, is an inflow to A will debit it in his cash book, expecting the what? The bank to credit it in their bank statement. That's how it happened. If A make a deposit in the cash book, A will debit as an inflow into his account. While the bank keeping the money on his behalf will credit, and after the credit, they will send an SMS. This SMS is to tell A that the account has been credited in the bank statement. Open your own cash book and debit this money as an inflow to you. Now, if the bank fail or omitted to credit such deposit, we say the bank has done what we call uncredited. Uncredited means the check has not been recorded. Now, let's move from uncredited check to bank charges. That's another factor that can cause disagreement between the bank statement and the cash book. We have the bank charges. That's number 3. Bank charges. What is bank charges? Bank charges are charges paid by the customer. Are charges paid by the customer for service rendered for service rendered by the bank, e.g., transfer charges, ATM maintenance charges, etc. Now, these charges are charges that the customer paid for the service rendered by their bank. Now, it can cause disagreement. Why? If you transfer 1 million in your cash book, there's an outflow, you credit 1 million. The bank will debit 1 million in the bank statement. That is debit and credit. The bank will now further debit 1,000 naira charges. That can lead to disagreement. Why? The customer only recorded the 1 million naira in the cash book, while the bank record both the 1 million naira that was withdrawn. In addition, again, they also recorded the charges on that transfer, 1,000 naira. In that case, the balance of the cash book will have a surplus of 1,000. The balance of the bank statement will have shortage of what? 1,000. And this will create disagreement between what the bank recorded in their bank statement and what the customer recorded in the what? Cash book. In that case, where bank deducts charges, what we have learned today is that once bank deducts charges, the customer is to record the actual amount transfer and also to record the charges with the transfer, not only to record the transfer without recording the charges. Why? The bank will record both the transfer amount and also the charges amount. And if the customer omitted to record the charges, this will lead to what we call disagreement between the book kept by the bank and the book kept by the customer. We also have what we call standing order. That is another factor that can cause disagreement. Number 4, we have what we call standing order. What is standing order? Standing order is an instruction. Is an instruction given to the bank. Given to the bank by the customer to deduct certain amount of money from his or her account monthly or quarterly or yearly. E.g., it may be monthly payment for yearly payment for rent or monthly. It may be the bank should be paying a subscription on monthly basis, etc. A customer can give an instruction to his bank that on every month, pay my house rent to my landlord. On every month, pay my TV subscription to my service provider. What the bank will do is just to put it on reminder. Once it gets to that particular day, the bank will make that payment on behalf of the customer. And once such payment is made, the customer is meant to record it on the credit side, which is an outflow. And the bank is meant to record it on the debit side, which means an amount has been withdrawn. If the bank record the standing order on the withdrawal side and the customer forgets to record on the cash book when he has given an instruction to his bank, the two books will not have the same balance. Because why? Once the bank record the standing order, which is the instruction, the customer is also expected to record that instruction in his cash book of that month. And once the customer omitted to keep the record of the standing order in his cash book is going to have excess balance in his cash book, while the bank statement will have a shortage balance. And this can create a lot of disagreement between the bank statement prepared by the bank and the cash book prepared by the customer. Now, another factor is dishonored check. We have what we call dishonored check. What's dishonored check? Dishonored check. Dishonored check are bounced check. These are check. These are check rejected by the bank for one of the following reasons. There are reasons why bank can reject a check. A, insufficient fund. Insufficient fund in customer's account. That's one reason. When a customer has insufficient fund without applying for overdraft, a customer have 150 naira in his bank account, and the same customer is issuing a check of 150,000 to a supplier to go and withdraw. That's not an issue. The bank will collect the check and put refer to drawer. Refer to drawer, or they will put owner's attention required. Maybe the owner was sleeping at the time the check was being issued. The bank will collect the check and write owner's attention needed, or refer it back to the owner. 2, when there is difference between amount written in West, amount written in West, and amount written in figure. Amount written in figure. Such check will be rejected. Where a customer issue a check, in West, the customer wrote 2 million naira. In figure, the customer wrote 200,000 naira. There's a discrepancy between the amount written in West and amount written in figure. Such check will be dishonored by the bank. 3 is irregular signature. Where a customer signed a signature that is different from the original signature when the account was opened, such check will also be what? Rejected. All these 3 factors can lead to a check being dishonored. Now, we also have another factor which we call credit transfer. There's another factor known as credit transfer. We call it credit transfer. What is credit transfer? Credit transfer is an amount transfer into a customer's account, by a debtor, but in which the customer, which is owner of the account, is not aware, is not what? Aware, due to network failure. In today's world, where we have internet, once a transfer is made into your account, the bank will send you an SMS that a third party have sent money into your account. But if the owner of the account, which is the customer of the bank, could not receive the SMS alert due to network what? Failure, such amount will not appear in the cash book of the customer, but the amount will appear in the bank statement of that customer. Because for any amount transfer into your account, the bank is aware and is immediately and automatically recorded in the bank statement. But it needs the bank to send an SMS to the customer that one of your debtors have transferred money into your account. But where there's network failure, the customer may not receive this alert till the end of that month, where a reconciliation has to be made. Not that the customer will not later be aware, but he will only be aware only when he receives the bank statement from the bank. And if the bank statement has not been sent to the customer may not be aware that a third party have transferred money into his account. The last two factors that can create disagreement between the bank statements and the customer is what we know as error by the bank. This is where a bank make an error in preparing the customer's account, or the customer itself make an error, which we call error by the customer. The customer will make error. The customer can make error when preparing the cash book, and the bank too can make error when preparing the bank statement. If any of this error happens, it has to be corrected during the process of reconciliation. Now let's move on. How do we reconcile? We can make reconciliation. We can prepare bank reconciliation using two different methods. There are two different methods that can be used to prepare bank reconciliation. One, we have the indirect method. Two, we also have the direct method. Now, if there are two methods, let's look at the two methods. Under the indirect method, which is the first one we want to look at, of preparing bank reconciliation, the first thing we are going to prepare is the adjusted cash book. We'll prepare what we call adjusted cash book. That's the format of the indirect method. Under the adjusted cash book, we'll start with balance drawdown. We'll put here credit transfer, and we also have what we call dividend received. On the credit side, we have what we call bank charges, we have standing order, and we have dishonored check. After this, we'll add a minus to arrive at what we call balance carried out. This balance after the adjustment. We'll close the adjusted cash book. After this, we'll now prepare what we call bank reconciliation statement. as at. Now, this bank reconciliation statement is like this. The balance we have here, we'll call it balance as per adjusted cash book. Balance as per adjusted cash book is this balance. Out of those factors that are affecting, we said add unpresented check, add unpresented check. Once we add unpresented check, we have this. We said less uncredited check. Once we less our uncredited check, what we are going to arrive at is known as balance as per bank statement. This is the format using the indirect method in practice. But if we are to make use of the direct method, the format will be different. Under the direct method, the format is different. And we are going to look at illustration both under the direct method and the indirect method. Under the direct method, the format looks like this. We have what we call direct method. Under the direct method, the format is bank reconciliation statement as at. What's the difference? The difference is that under the direct method, there's nothing like adjusted cash book. You just go straight to bank reconciliation and you start with balance as per cash book. You start with balance as per cash book. You now say add unpresented check back. Also, you add back the credit transfer. Also, you add back your dividends. Once you add this, you arrive at this. You now say less uncredited check. Less uncredited check, less bank charges, less standing order, less dishonored check, once you less all this, less mean put it in bracket, what you are going to arrive at is known as balance as per bank statement using the direct method. Under the direct method, there's nothing like adjusted cash book. Just prepare, put all the adjusted cash book item on the debit side of adjusted cash book, add it to your unpresented check. The credit side of adjusted cash book, less it along uncredited check. Now let's look at illustration. Let's look at illustration under the indirect method. While in our next video, we'll look at illustration under the indirect method and other illustration. Now, this is bank statement as at 31st December 2018 of Wuse Limited. This is the bank statement prepared by the bank. And this is the cash book for the same month. Firstly, for you to reconcile, there must be bank statement prepared by the bank and there must be cash book prepared by the customer. It may not actually be the customer, but the accountant of the customer business will be in charge of preparing the cash book. The debit side of the cash book is inflow. We have done that before. While the credit side of the cash book is an outflow. Meaning any inflow into the cash book, which is the bank account of the company, any inflow is a credit in the bank statement. And any outflow is debit inside the bank statement. The credit side of the bank statement is an addition to the balance. The debit side of the bank statement is a subtraction from the balance. Now, what is this telling us? In December, from December 1st to December 31st, the bank balance is showing 142,500. What this bank statement is telling us is that the amount of balance that Wuse Limited has with this bank is 142,500. At the same time, the cash book prepared by the accountant of Wuse Limited is telling the company that the balance they have is 143,500. Meaning, between the balance of the bank statement and the balance of the cash book, there's a disagreement, which we need to reconcile. In that case, let's see how we are going to reconcile them. We will be using this for explanation. This is Wuse Limited. What are we going to do first? The first thing we are going to do is to prepare Wuse Limited adjusted cash book. Now, what do we call adjusted cash book? Adjusted cash book is the same thing like we want to update the cash book because this cash book, some transaction is missing. Why are we reconciling? And how do we reconcile? Please, I need your attention. I want to reconcile the bank statement and the adjusted what and the cash book of Wuse Limited. The first thing you do when you are reconciling is to pick the balance of the cash book in the question, the closing balance, the BD. If the BD fall on debit, your balance here will be on debit, which we refer to as balance brought down. 143,500. Why are we reconciling? This balance is not correct. Because if this balance is correct, it will have been equal to the balance of the bank statement. Now, is there anything missing in this original cash book that needs to be updated? How do we do that? In practice, if you want to update this adjusted cash book, the first thing you do is to request for your bank statement. This is our rough work. You request for your bank statement. And why are you requesting for your bank statement? Is there anything that the bank has recorded in the bank statement that the customer has not recorded in this original cash book? What do? You check your bank statement. And when you check your bank statement, you can check debit, you can check credit. But what I want to do is to check the debit side first. Once I'm checking the debit side, I have to do what we call, I have to confirm whether the figure was recorded by the customer. Where I have to confirm it in the cash book. Now I'm checking the debit side of the bank statement. I have to confirm it on the credit side of the cash book. And that's how we do it one after the other. Please, let's follow. The first item on the debit side is 5,000 in the bank statement. I'm checking the debit side. I will now do confirmation. I'll confirm it. Please look at this. I'll confirm on the credit side. The bank recorded this 5,000 on the debit side. Let's confirm. Let's confirm it. Let's confirm it. Confirmation. It shows that the customer also recorded it. You see, I've marked the two, meaning I've checked whether the bank recorded the item on debit, and it was confirmed the bank recorded, and I confirm it on the corresponding entry of the customer, showing that the customer also what? Recorded, meaning there's no disagreement between the bank and the cash book. Please don't check the cash book. Please note, check only the bank statement. You are only using the cash book as a source of what? Confirmation. And why are you confirming? You are confirming whether the customer record on the credit side or not. If the customer did not record such item on the credit side of the cash book, you help the customer to update it on the credit side, meaning you are reconciling. First, check whether the item is recorded on the bank statement. Once you check the debit, confirm whether the customer recorded it on the credit. If he doesn't record it, help the customer to update. That's you are reconciling. Now we have checked 5,000. Next is 500. Less. The bank has recorded transfer charges 500. We have checked it. Let's confirm it in our cash book. You see, the date is not there and this item. What it means is that the bank recorded the charges, but the customer forgets to record the charges. You help the customer now to update. Start this, meaning this was not recorded. The bank record the charges on the bank statement, but the customer did not record it on the credit side of the cash book. Help the customer to record on December what? 5th. What's this? Charges. Now you have helped the customer to record it. Let's move on. You're only checking the bank statement. Don't go to the cash book. Just use the cash book as your confirmation. 4,000 Funke. You see, the customer recorded it. Go back to your bank statement. Don't check that cash book. The next is 8,000 standing order. Let's look at it to 1, 2, 3. The bank record standing order on the 12th. The customer did not record by confirmation. The customer did not record. This is another one. Now help the customer to update on the 12th. That is a standing order. How much? 8,000. After that, we have 12,000 dishonored check of 002. We don't have it here too. Making 3. That's on the 30th. There's a check that was dishonored that was not recorded. Now, after that, making 3, after that, there's nothing here. We are done with this. Immediately we check the debit side of the bank statement, we now start with the credit side also. Once we check the credit side, we are going to do what we call confirmation of it. We are going to confirm whether the customer keep the record in the cash book. What side of the cash book? We'll confirm it on the debit side. Meaning, if we check the credit side of the bank statement, we'll confirm it on the debit side of our cash book. Where I underline is where we are going to confirm. If we confirm the figure there and it's not there, we'll update it in that same side in the cash book. Now, let's start. We have 10,000 balance. Babu Wala. I've checked and I've confirmed. After that, we have 50,000 on the credit side. I've checked it. Let me confirm it here. You see the way I put my hand? Is there. We have marked it. 60,000 somewhere. Let me confirm. Is there. 12,000 check 002 is there. Credit transfer 40,000. Credit transfer on 31st is not here. Meaning the customer forget to record credit what? Transfer in his own cash book. And that has caused disagreement. The bank has recorded 40,000 credit. By confirming it on the debit side, we could not see that credit what? Transfer. You help the customer now on 31st, sorry, on December 31st, we call it credit what? Transfer. How much? 40,000. Now, after the 40,000, is there any other item? No, there's no other item again. By this, you are done with your adjusted cash book. What do? We check the debit side of the bank what? Statement to confirm on the credit side. Any item we cannot find on this credit side when we are confirming, we'll update it on the credit side here. After that, we check the credit side from beginning to the end and confirm it on the debit side. Any item we cannot get on this debit side, we update it on the what? Debit side, and we are done with our what? Adjusted cash book. After that, we close this adjusted cash book by adding the debit side. Let's balance the cash book. This is 183,500. Let's balance the credit side too. This is 20,500. Please, calculator, help us to minus 183,500 minus 20,500. What do you have? 163,000. Thank you. Account close. Let's add it together. 183,500. 183,500. That is solution one. That is solution one. Now, the correct balance of this cash book is supposed to be 163,000 instead of what they have before as what? 143,000. Is because some items were omitted when the customer were preparing the what? Cash book. But on getting his bank statement, he was able to discover those items that has been what? Omitted. And as those items were updated into the adjusted cash book, the correct balance is 163. Based on this, we'll now solve two. Solution two is bank reconciliation. Bank reconciliation statement as at 31st December 2018. How do we solve this? Please, I need your attention. The first balance here, this is what they call balance as per adjusted what? Cash book. You come here, balance as per adjusted cash book. That is 163,000. Now, when we are preparing the adjusted cash book, I was checking the bank statement. I have to clean it now. This is for adjusted cash book. For the bank reconciliation statement, you are going to check your what? Cash book. Firstly, you will check for unpresented check. This is what you are checking for now. Meaning, for you to do unpresented check, you will check your cash book. What side are you checking? You will check your credit side. Why? The credit side is for outflow. How many checks were given out that were not presented to the bank? That's what we call unpresented check. And we are going to add it back. Because any check that was given out but was not presented to the bank, it means there's no outflow. And if there's no outflow, what do? You add back. Now let's check how many checks that were given out on the credit what? Side of our cash book. Meaning, as we are checking it, how are we going to confirm that that person takes the check to the bank? We are going to confirm it. Whether the person takes the check to the bank, we'll confirm it on our debit side of our bank statement. This is where we'll confirm whether the person takes the check to the bank or not. If we confirm it in the bank debit side and that check is not there, it shows that that check has not been what? Presented. Let's start one by one. The first check that was sent to the bank was 5,000. Let's confirm it on the bank statement debit side. Confirm the check was taken to the bank. Let's go back to your cash book. Don't check that bank statement. Just use it as confirmation. 2, Funke. Funke was given a check of 4,000. Let's confirm it whether it take that check to the bank. Yes, Funke took the check to the bank. Olu was given a check of 10,000. Let's confirm it on the bank statement whether there's a place Olu. You see that Olu is not there, meaning Olu did not take the check to what? To the bank. We have confirmed one unpresented check. If Olu did not take 10,000 check to the bank, it means there's no outflow. And if there's no outflow, meaning there's no payment. It was only recorded, but there was no payment. What the owner of this business will do is to add that money back because he has treated the money as an outflow. Now that he has discovered that Olu did not take the check to collect any money, but he has deducted from his cash book, what he's going to do is to add back. Now, all presented check, we have one, 10,000. Tayo, 30,000. Let's check, let's confirm. We don't have Tayo here. Meaning this is another unpresented check. Tayo. How much is Tayo? 30,000. That's all. Because after Tayo, there's nothing there. Giving us a sum of 40,000. What do? We add. By adding it, we're going to have 203,000. After this, let's the uncredited what? Check. Why are we lessing? Any check with deposit with the bank. That's for unpresented. The first one. Now let's look at for uncredited. For uncredited check, we're also going to check our cash book, but this time we are going to check credit. We are going to check the debit side. Why? The debit side of the cash book is meant for what? Deposit. And any deposit made inside the cash book, it will be confirmed whether the bank record it. Because if the bank record it, it's supposed to be on the what? Credit side of the bank statement. It must be confirmed. Now, if you have deposit, you have add. If you discover that the bank did not record, what do? You cancel. For you to cancel, you will less. If you have added 1 million to your account, let's say you have 100,000 naira in your account before, that's your cash book balance. You now deposit 1 million, meaning you expect to have 1,100,000. And the bank too is supposed to have 1,100,000. On getting to the bank, you discover that the bank did not record the 1 million. Their own is just showing what? 100,000. What you do is to go to your own reconciliation and cancel the 1 million. And how do you cancel the 1 million? You have already added it to your cash book before. Now, what do? You will less it. Less it means you cancel that money out of your what? Account. It means out of the whole money you have in the account now, which is 203,000, if there's some money that the bank has not recorded, you have to cancel it out of here to now know your original what? Balance. How do we do that? Let's check all the debit side of our inflow of our cash book. Check debit side of your cash book and confirm it here. Let's check. There was 10,000 balance. There was 10,000. The deposit, a check 001 of 50,000, and the deposit was credited by the bank. This is credited. That's confirmation now. We have confirmed that 50,000 was credited. After that, Chioma also help us to deposit money with the bank. Let's check whether Chioma exists on the credit side. Chioma check 9 was not credited. If Chioma check was not credited, you go to your reconciliation and put Chioma. How much? 40,000 naira. We have discovered one check that was debited by the customer, but it was not credited by the what? Bank. Samuel. Samuel also took check to the bank. You see, Samuel check was what? Credited by the bank. Babuala. Alima. Alima check was not credited, which is 20,000 naira. In that case, we have discovered another uncredited check for Alima. How much is the check? 20,000 naira. It can be up to 20. In some company, this can take them a whole night to check all the check they have taken to the bank, but does not appear on their what? Bank statement. In that case, such check is uncredited. They have to minus all. Check 002, let's confirm it was credited. In that case, after you check the last one, don't check the bank statement. Check the cash book debit side and confirm on what? Credit side, for the purpose of getting uncredited check. For the purpose of getting your what? Uncredited what? Check. What you are going to check is your cash book debit side. If you cannot confirm it on what? Credit side, it amounts to uncredited check. And what are you doing? You are putting the uncredited check to cancel it because you have added it in your cash book before. Now that you discover that the bank has not recorded it, cancel it out of your account. And that's why you are lessening it. It has been formally added to your cash book. By lessening it now, you have used minus to cancel addition. Why? If the bank has not recorded it, the cash book too should cancel it. Now, how much? A total of what? 60,000 must be less. Once you less 60,000, you are going to have 143,500. That 143,500 is what we call balance as per bank statement. Balance as per what? Bank statement. You start with balance as per adjusted cash book, which is this. You have this minus 203 minus 60,000. What do we have? 143,000. At the beginning, we have 143,500. We have 143,500. Help us to add this. There's a mistake somewhere. Help us to minus this from this. I think is 143,000. Help us. Add this together. Something is wrong somewhere. 10 plus this, plus this, plus this, plus this, plus this. We didn't supposed to have 500 here. What do you have? Plus 12,000. 192. Add 5,000 plus 4,000. Plus this 19. 19 plus 30. 19 plus 30. What do you have? 49. 49,000 minus 192,000. Now, in the original question, this is 143,000. Let's come back here. This is 143, meaning we're supposed to have 143,000 here. That's where there's mistake. Now, 143 plus 140, this is a 183,000. Now, please minus 183,000 minus 20,500. 183,000 minus 20,500. We have 162,500. 162,500. Meaning balance as per adjusted cash book is 162,500 plus 40,000. That is, what do we have? That should be 202,500. Am I correct? 162,000 minus plus 40,000. What do you have in the calculator? 202,000 now minus 60,000. What do we have? 142,500. We are correct. Now, balance as per bank statement is 142,500, which is equivalent to what is here. Now, once you are able to have the figure in the bank statement, it shows your solution is correct. What we have done is to prepare the adjusted cash book. When we are preparing the adjusted cash book, we start with the balance, which is 143,000. After that, we check the bank statement and confirm on the credit side. Any item that is not there, we update it on the credit side of the adjusted what? Cash book. We check the credit side of the bank statement, and any item that is not on the debit side as confirmed will be updated on the debit side of the adjusted cash book. We have the debit side of the adjusted cash book minus the credit side. We have 162,500, and that is balance as per adjusted what? Cash book. After that, to get our unpresented check, we check the credit side of the cash book to confirm it on the debit side of the bank statement. All items that we could not see there, we tag them unpresented check and we add it to get this total. To get our uncredited check, we check all the items on the debit side of the cash book to see whether they did not appear on the credit side. Those ones that did not appear on the credit side, we tag them as an uncredited check. We minus the total uncredited check from 202,500. The figure that remained there is what we know as balance as per bank statement, which is the balance here. It shows that this account has been reconciled. Thanks to our subscriber, thanks to our viewer. We really appreciate the time you spent on this video to add value to knowledge. And we are saying that in our last video of the series one, we'll be looking at the second and third illustration on bank reconciliation, where we are going to be looking at the indirect method also, and also the direct method. Thanks for watching our video. Thank you. God bless you.